With the ever-looming threat of raising interest rates once more, will Bitcoin be able to remain above 30,000 and continue upwards, or are we going to see a correction back down? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the macro and the smaller time frame price action. We're going to be discussing the possible looming threat of raising interest rates and what impact this is going to have on the price. We're also going to dive into the smaller time frame price action and discuss the next move for Bitcoin. Are we going to see a continuation, or are we going to get a rejection? Before we get into it, smash the like button, hit the comment button, subscribe to the channel. If you're interested in content daily for Bitcoin, focusing on the facts, the data, the technical and structural information, the economic news, and overall market conditions, this is a place to be. No hype, no emotion, no BS, pure raw TA. If that is the kind of content you are interested in, join us on Telegram as well. It is the second link down below. You get access to charts, updates, videos, educational posts, news events, and so much more to keep you in the loop with Bitcoin, cryptocurrency, and the economy as a whole. If you're interested in joining our VIP channel with 600 plus members for trading signals of charts, justifications, entries, targets, stop losses for every single trade, including our group chats over here where we teach you guys how to trade and you guys develop your trading skills and proficiencies. If you're interested in that, join us on that VIP channel. For more information, go to the free channel, click the pinned comments. Up to the top, you'll find all information, including our entire trading track record since February 2021. Let's dive into the video. Market data is where we're starting. Currently for the 24-hour period, Bitcoin's 24-hour volume is down 38.18%. We're currently sitting at 87 billion. For 24-hour liquidations, we're sitting at 89 million, and we're down around 58%. Looking at the month of June, we are up 10.03%. Absolutely fantastic to see. However, as we have mentioned before, we do still need to see a monthly candle close above 30,000 for us to technically enter a macro uptrend. If we're looking at overall trends and a shift in trend, the only shift we have had in the trend at the moment from this break was a shift from a weak bearish trend, meaning a daily downtrend, right, into a daily uptrend. The bullish weekly trend was never lost because we never lost 24.4k and therefore has been intact the entire time, and thus the macro uptrend has not yet initiated until we monthly close above 30,000. So we're looking at the overall trend basis and directional bias. Not much has changed. What we have seen is a daily trend turn from bearish to bullish, and the weekly trend gained strength, but not quite yet have we seen enough to break into an official macro uptrend. Now, that doesn't mean saying I'm bearish. This is the facts. This is the data. The trend is incredibly bullish. Actually, we'll go over a lot of bullish stuff today, but if we want to see that macro trend flip in terms of our historical liquidity and resistance ranges, we need to see 30,000 closed above to get that. Now, there's a couple leading indicators we're going to go over today to suggest that it's very possible, but we'll also get into the negatives and possibilities of that actually not happening today as well. We're going to cover all bases. Looking at the liquidations, we can see in the last 24 hours, we have seen quite a fair bit of liquidations. We're dropping down quite a fair bit to around 89 million, down 58%. A lot of longs have been liquidated, sitting at around, 66% of those liquidations now. Of course, the price did rally up massively. A lot of people were jumping in late longs, and we have come down and starting to tap a few of those longs out. This is healthy. This is good. If we want to see a continuation upwards, we do need to offload some of those late longs, provide liquidity to the market, and then push back upwards. So let's go ahead and talk about the broader markets, and we'll get into Bitcoin. So the DXY has come down. It has been holding the support level now for quite some time. You can see our support level around 102. We're kind of fluctuating up and down, more or less holding it. I do expect the DXY to push up while we remain above this support level, but I don't expect the DXY to break upwards or push into this range unless we do see that break upwards. So looking at this downward trending resistance, our dotted line, if we do break above this level, we could potentially see a continuation upwards to 105. This move be very, very bearish for stocks, very, very bearish for risk assets, including Bitcoin as a whole. If we do break below this level and continue downwards, we are looking for a move towards 101 to 101.5. Of course, this is bullish for stocks, bullish for cryptocurrency. Now, there's a reason why Bitcoin has been moving against the market, and I mean against the market in terms of the S&P 500 and traditional markets in the last few days, and we'll discuss that a little bit in just a moment, but it has to do with correlation. And we do know that Bitcoin and stocks have about a 0.7% correlation. So 0.7 to 70% correlation. This is a strong positive correlation at the macro time frame and higher time frame. With that, we know that the stock market has an inverse correlation with the DXY. So if the DXY and the stock market has an inverse correlation, therefore cryptocurrency has a secondary inverse correlation to the DXY, okay? Now, if we look at the overall market, this is the risk asset market as a whole, has a correlation to the DXY, and the DXY again is a representation of the strength of a dollar and is based around the cost of debt, and therefore the correlation is more to do with the cost of debt. But within the market, these individual assets also have their own systematic risk. So the overall market systematic risk is dropping. Both assets are more likely to rise. If the market systematic risk is rising, both assets are more likely to drop. However, the correlation between the assets can be stretched if the individual risk of the asset shifts against the market risk. In this instance, we have seen that as we've seen a lot of bullish news occur, such as the ETFs, such as banks offering spot Bitcoin. All this bullish news is counteracting the market risk and is pushing Bitcoin upwards, even when the overall market risk, the systematic risk, is actually starting to rise again on the basis of the potential raising interest rates. And that is why we've seen Bitcoin go up, and we'll discuss that in just a moment a little bit more. So the S&P 500 has come up and retested its upper resistance of the rising channel, a bearish structure. We do expect a move towards a lower channel at some point. If we do break this level, we expect a move downward. If we do get above this level, around 4,500 is the level we need to invalidate. So 4,500, this level over here, if we can close a weekly candle above 4,500, we'll be invalidating this bearish structure, and we could continue upwards on a nice parabolic breakout and really push upwards into a macro uptrend for the S&P 500. So let's go back and discuss now, before we get into Bitcoin, the possibility of future rate hikes, what impact this is going to have on cryptocurrency, and how maybe cryptocurrency could, I would say, ignore these rate hikes. What are the possibility we see this correlation between the S&P 500 and Bitcoin continue to be stretched and allow Bitcoin to move upwards even in light of negative news? So first and foremost, we do need to give you context. In the last meeting with Jerome Powell, they basically said, real summed up, they want to continue to fight inflation and they want to get inflation down to 2%. By doing that, they need to raise interest rates. Only way to bring inflation down, or the easiest way to do so, is to bring up the cost of debt, to raise interest rates, raise the cash rate, and bring down that inflation. So they did announce that they are expecting to raise interest rates in the future later in this year again, which means this current pause was nothing more than a waste of time, temporary relief for the banks as expected, but didn't really result in anything. Now, nothing is set in stone until it is, and therefore right now, even though they are saying they're likely to raise interest rates again, this is nothing more than speculation, and it is a rumor until proven otherwise, until they actually do it. Remember, watch what they do, not what they say. So let's assume they do bring up interest rates again. How is that going to impact asset prices? How is that going to push the prices around on a macro scale? So if inflation is rising, which it currently is, right? Inflation is not coming down. Go to the shops, go out somewhere to buy something. Inflation is more or less either the same or it's continuing upwards. We're not really seeing inflation come down for the necessary products. Rent, food, all that kind of stuff is very, very high still. We're still seeing inflation quite high. You look at the average Joe and talk to the average Joe. In fact, inflation is underreported. It is not overreported, meaning the actual inflation rate is much higher than is currently being reported in the data. But they manipulate the data. They swap items out of those baskets of goods to manipulate what the reflected CPI data actually is. So assuming inflation is back up, which it is showing signs of rising back up and continuing upwards, and by announcement of the Fed themselves saying inflation is actually rising and is still a problem, interest rates do need to rise, right? Interest rates do need to rise to counteract that inflation. If interest rates rise, the cost of goods and services rise, and the dollar rises, the DXY rises. The debt to service ratios actually decrease, meaning that the debt to service ratios, people have less capital, less funds, less cash flow to service that debt, and their ratio between available cash and expected debt expenditure increases, okay? They don't have as much money to service that debt, and therefore we see available household cash flow decreases as more money goes to service that debt, and we see people are less likely to invest in risky assets or take money out of those assets to increase that household cash flow, to increase their debt to service ratios or service that debt. In terms of companies, we see a decrease in cash flows as stock prices fall. Generally, these companies or other people need to sell off these stocks, sell off their stocks, sell off their bonds to increase their company cash flows to make their company look healthy. At the same time, they're less likely to take on debt to buy income producing assets as the risk return is unfavorable. So what we're getting at here is, guys, if inflation starts to continue upwards and interest rates rise as a result, we do see all of this happen as a snowball effect. And all of this results in a system where the systematic risk in the market increases. So let's go ahead and dive into the next chart, and then we'll go ahead and get into Bitcoin. So what we saw over here was our systematic risk trajectory. Now, our systematic risk is a combination of a variety of different things. Systematic risk is essentially calculated by the overall uncontrollable elements in a market that provide risk in the market. So uncontrollable risk. We have interest rates, we have inflation, we have taxation policy, we have economic policy, we have governmental policy, and we have societal perspective. These provide risk in the market to investors that they cannot control. The main one over here being interest rates. What we saw, interest rates are lagging to inflation. We have a lag to inflation. Inflation was rising, inflation topped out temporarily. Apparently, we saw interest rates top out temporarily, and this is a month-on-month change. We've seen inflation and interest rates decrease, right? We're seeing interest rates go from 0.75 to 0.5 to 0.25, and finally a pause. We saw a pause in interest rates. Now, here is the thing. If inflation is expected to continue upwards and we paused interest rates, the trajectory that we once had, which was interest rates moving towards a pivot, is still possible, but when they announce they're more likely to increase interest rates again, we have now this upward trajectory, expecting inflation to rise and interest rates to rise with it. And therefore, the pivot over here, this trajectory, this formed trajectory of systematic risk decreasing has now been deleted. This trajectory provided the basis of the move upwards for both the stock market and for Bitcoin as well. The market's front run overall systematic risk. Moving on to here, guys, we can see there's a correlation between stocks and crypto of 0.7%. Generally, when we see systematic risk shift, we see the return or estimated return in relationship to risk of these assets move in conjunction. However, if an individual asset, okay, this is an individual asset, this is the individual asset, this circle is the entire market. The market has a systematic risk. Let's just say the risk over here is whatever plus, let's say negative 5, whatever we just say it is. And then these individual assets have their own risk. So we have a -4, and then we have a +2. So we can have situations where the risk of these assets actually are different to each other in the market itself. And that is because of these individual measurements of systematic risk. Although the market has its own measurement of systematic risk, individual assets within that market also have their own measurement. So we can have discrepancies between the two. In this instance, we saw societal perspective increase. We saw government policy improve, okay? We saw ETFs launch, we saw public perspective increase as Bitcoin rose, and we saw that as a reflection of the recent price action. Now, it's hard to say if this is going to sustain because these two elements that push price up are usually non-sustainable elements. They are temporary shifts in price. What is a sustainable element is going to be interest rates, a main driver of price action. So we do see interest rates actually rise again. We can expect cryptocurrency to fall back to a correlation with the stock market and the market itself and actually come downward. So there is a risk that cryptocurrency come downward, but let's go ahead, guys, and get into Bitcoin. Let's get into it right now. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, Bitcoin, we have been in a nice strong uptrend for quite some time now. As you can see, that weekly uptrend has been intact for quite some time. We're looking at ever since basically the start of the year. We were in a daily downtrend, we broke towards the upside, and we are now retesting a critical resistance. If you've been following the channel, you would have known we looked for entries and we expected a breakout when we broke this daily downtrend resistance. We had 3 points of confirmation. Point number 1, 50 EMA break, saw. Point number 2, downtrend resistance break, saw. Point number 3, RSI break, momentum shift. We saw that and we went all the way up. In fact, we hit our target for Bitcoin. Not only to the percent, we got our target within 0.02%. We were $5 under the projected target for Bitcoin on that rejection. Since then, we have seen a rejection. Absolutely fantastic move for Bitcoin there. Absolutely amazing to see. However, we're going to be discussing, is this looming threat of interest rates going to push Bitcoin down, or are we going to see the short-term price action prevail and Bitcoin push upwards? So we discussed already what the impact these interest rates could have on Bitcoin, and the impact is it could push the price down. Now, we do have to keep in mind the weekly uptrend is showing massive signs of bullish consolidation and breaking out. We talked yesterday briefly about the 4-year cycle. Go watch that yesterday's video. If we break a monthly candle about 30,000, the next expected target for Bitcoin is going to be 48,000. Fantastic, guys, fantastic. Now remember, the economic climate can actually suppress price action. So we do see the $30,000 break push upwards. We can't just stop paying attention. If interest rates start to rise again, the risk in the market rises and the probability that the continuation upwards starts to decrease. So we do have to be aware of these kind of things. We can't blindly buy and just hope for the best. Economic information, economic drivers move macro price action. It doesn't what the charts say, guys. Sometimes when the economic drivers shift, we have to shift our perspective. But look at the macro chart. We had that breakout on the Gaussian channel. The last time we saw that was 1,500 days ago. When we did see that, we saw the break upwards and we retested that level. That level was in fact the retest of the dotted trend line. No surprise, no surprise. If we look prior, we had the prior breakout right over here. Where did we go to? No surprise once more. We went up to retest that dotted trend line all the way back right over here. So we have seen in the past, when we break out a weekly candle of the Gaussian channel, we do end up moving upwards on a macro scale to that dotted trend line. In this instance is 48,000. So we do expect that to happen in macro, and we do actually think that is a more probable scenario, and we'll discuss a little bit more in a short term why. But if interest rates do rise, this could suppress that move. That could shift the move, change the risk, and delete that probability of it going upwards. That is something to keep in mind. So in a perfect world where interest rates don't go back up, that is going to be the most likely scenario. If interest rates do go back up, it could possibly alter and shift the probabilities in favor of a rejection instead of that continuation upwards. And that could have long-lasting effects and actually impact the 4-year cycle itself. That's another time though. Let's get into the smaller time price action, guys, and discuss what is going on. So Bitcoin has broken upwards. It hit our target right over here of 30,434. Actually went a little higher. And we have been now in a short-term downtrend ever since. So just as we had, guys, this downtrending resistance here, keeping us in a downtrend until we broke it, we now have a small time frame down resistance. This is our downtrend resistance right over here. And therefore, if we're looking at it from a trend-based perspective in the short term, do not expect the price to move back upwards until we get over this downtrending resistance, okay? Until we get over. Now, we've had 1, we've had 2, we've had 3 rejections. It is likely on the 4th retest, we do break through if we retested. What we can also do is look at the RSI. We can drag our trend line across. If you see a breakout on the RSI over here, that could be a leading indicator for the fact the price is going to break upwards. So watch out for that. If we want to see a continuation upwards, to keep it very simple, we need to see a breakout of this structure. We need to see the price break out of the RSI and the structure and remain above. I'm going to keep it right there. That is what we need to see. The price is going to move upwards. The next thing is, where will the price go to if we do move upwards? So let's go ahead, guys, and jump into this chart here on the daily and take a look at our liquidity levels. Where are the next levels of resistance for Bitcoin? Where are the next targets? So moving really quickly from left to right over here, looking at our past price action to our present price action and our VRPV, what we're instantly noticing right over here is above 32,000 to about 34,000, we have a gap in the VRPV. Now, this is an area of low resistance. It's a low resistance range. But prior to that, we have a jump up in the VRPV, a little bit of a hill. This hill represents an area of resistance. If we were moving down into it, it would be an area of support. So our next logical target, if we do continue upwards with Bitcoin, is going to be somewhere around 31,300 to 32,000. It's going to be this area right over here. The next target for Bitcoin is going to be somewhere around there, 31,300 to 32,000. We might see a liquidity grab above and then rejection down. We might not hit 32,000. We might just push into that range. But if we're looking at structural liquidity levels, if we do break upwards, if we get back above 30,000, we break through, that is going to be the next target for Bitcoin. Let's talk about the possibility of a move down. I'm going to say this. This is a bullish compression right here. We have a bullish rejection. We have a bullish compression. We're offloading those late longs. We're compressing sideways while we are moving in this downtrend. So we have sideways compression in a downtrend. This is generally a bullish compression, okay? So the probability of a break upwards is slightly higher, and I do expect it to happen, but let's discuss what will happen if we break downwards. So when are we looking for a breakdown? We have our base of support right over here. You can see a nice strong base of support. This is what you would call a descending triangle formation. If you know descending triangles, you would know they have a slightly higher probability of a breakdown. So this is when it becomes a little tricky. The compression and the momentum is telling us we're actually strengthening, we're resetting, we can go up, where the structure is telling us we're going to break down. So this is why we wait for breakouts sometimes. This is why we play it by ear, as we do get conflicting messages from what the market and price action and metrics are doing. If we do lose this level on the 15-minute chart, we are going to be entering this lower resistance range where our next chunk of support is going to be sitting at 29,000. If we do break down from here, I would be expecting a move towards this area of liquidity. We'd be expecting a move into this level. Another possibility is we develop from a descending channel into a bullish channel. This could be a move towards this retest of this lower range, or potentially if we draw up higher, a retest of this lower range, taking us very, very slightly above 29,000 to around 29,200. So if we lose this level over here, I'd be expecting shorts. What you could do if you want to jump in shorts now is you could actually take shorts here and put your stop losses above that POC level, targeting this low liquidity range, taking profits along the way, main profits along this downtrend trend line, and in this range. If you want to play it risky, if you'd rather wait for moves, I'd be waiting and looking for taking positions. If we do hold and break above this level, reach those consolidation points, and then look for that next move upwards. So in the smaller time frame price action, I would be expecting right now, we are in a downtrend. The downtrend is intact. We have a bearish triangle, therefore a breakdown is likely. We have bullish consolidation, we have bullish reversals happening on the RSI. We can see compression going on. If we do break upwards, it's unlikely that break upwards should be faded. We're likely to move continuing upwards, but on a smaller time frame, if we do lose this level of support, there's a nice strong base of support. We can expect that measured move to play out, which will take us directly into this range. So watch out for the next move for Bitcoin, guys. This is going to happen over the next 24 hours. We actually have less than 24 hours. We have what? About 10 hours into Apex, and generally when we do make moves, we make moves in the last 1/3 of these compressions and these consolidations. So the next move is actually right around the corner for Bitcoin. Pay attention, watch out, don't get greedy, don't take massive positions. We are not in the time for that. Look at hedges, look to jump in moves at the point of breakouts, at the point of confirmations, not just breakouts. Confirmations. We break out of a trend is not just enough. We need to see technical and metric confirmations. We need to see momentum on our side. We need to see strength on our side. We need to validate those breakouts, otherwise we're just going to jump into a fake out, okay? Both for the top side and downside. Thanks for watching. I hope you enjoyed. Keep your eyes on the short term. Keep your eyes on what happens with the economy and interest rates. It is absolutely important that we see the price move with the market, okay? When we see the price move against the market like we're seeing now, this is obviously a warning sign. This is when we see large moves up, fake outs correction. So we don't see Bitcoin kind of come back down to the market. If we see interest rates continue upwards, we see Bitcoin continue upwards, this could be a warning sign. It could be a warning sign for the market for a correction, but I'm not going to go ahead and say that yet. I think it's too early. At the moment, charts are looking good, short term's looking good, macros looking good. At the moment, daily trends looking good. We're in a weekly uptrend, but don't get ahead of yourself, guys. We are not in a macro uptrend yet. We've seen the validations. We know the validations. Do not be the kind of people that got overly bearish down over here. When we were buying, do not get overly bearish. We were buying over here. People are over bearish, calling for 10,000. Do not be the people over here saying we're in a bull market when we were selling. And I'm telling you right now again, a lot of people are starting to get overly bullish, saying we're in a bull market already. We're going to $1 million, whatever it is. We've got some people saying we're going to play $10,000. I mean, how could you think we're going to go to 10,000 from here? And how could you think we're going to go to 50 billion from here? It's not going to happen, guys. We are underneath a major ejection zone. We are looking for breakouts and confirmation before the move occurs. Do not front run these macro moves. Watch the charts, pay attention closely. If you want to buy Bitcoin, you should have down in this liquidity zone or this breakout. If you're looking to sell Bitcoin, actually now would be the time to offload Bitcoin and look for re-entries above 30,000. Anyway, I'll leave it there. Thanks for watching. See you guys in the next one. Cheers.